Welcome, everybody, to the Chinchilla Pickin' Podcast. It is October 25th, 2022. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and as always, I am here with Brandon Beaver. Brandon, is it ever going to get cool yet for fall, or is it going to stay these warmer temperatures, man?
You know what? I wake up in the mornings to go to work, and then my car's frozen over, and then by the end of the day, it's warm again, and it's really frustrating because I hate cold temperatures. So I'm getting the worst of the cold temperatures, but not the good, pretty snow that comes across with it. Um, so my car's being frozen over, fogged up, all that stuff. I hate Ohio.
Wow. Wow.
Well,
Tell me how you really feel. Tell me that all of our Ohio listeners just turned off because of you now.
I mean, I hate it. We all hate Ohio weather. Nobody likes it.
I do.
No, why do you like it? You get like 2 weeks of bearable weather a year. You get 1 week in the spring and 1 week in the fall. We go
I
from being
disagree.
super hot to being like freezing cold, and I hate winter. I will move to Florida one day in my life, maybe.
I
I don't
love winter, man. Winter's
know what?
nice.
I would actually love to retire to Tennessee, like Gatlinburg or somewhere in the mountains. That'd be a good spot to go, even though it's cold there too. But whatever.
You could buy acreage in Tennessee for $1,000 an acre out in the middle of nowhere, man.
I have been sick the past 5 days. I'm sure this has something to do with it. I really need to quit smoking, but
Yes.
I have not shaved or anything, so you're just gonna have to deal with that on TikTok. I don't really care right now. You're lucky that I'm up and doing this podcast at the moment. Called off once at work.
If you take this part of the podcast and put it on TikTok, I'll be very disappointed. By the way, if you guys are listening to us right now and you like what you hear, I don't know why you would,
I'm
but
on
if you
TikTok,
do,
man.
if you have if you like what you hear, if you're one of those weird people, go ahead and hit that subscribe button. Go ahead and hit follow button and tell other people about us. We love to hear that. We love to see that organic growth. We are willing to go anywhere, and I mean anywhere, and podcast live. So if you want us to come to your university or college, let us know, or even place of business. We'll give a presentation. We're very knowledgeable. We've been doing this for a number of years now. We have no qualms about doing it in front of public or with people listening and taking pictures and staring at us like they were at their last podcast live. So that was a good time there.
Yeah.
But yeah, yes. How about we get into it, man? Rules. Go ahead.
I would actually like, let me just say this because you were telling me that you're going to get into China, which is the worst investing mistake I made in my investing life. So, if
I was
I
going to
know you
talk
want
about it, is what I said.
me
I
to
was going to
go,
talk about it.
like, you want me to go first, but let's get this out of the way. So
Okay.
go through the rules. Let's talk about China. And I was a bull in the China shop, and that's a huge mistake. Bulls
All
break.
right.
Why did I do that? But go ahead, Dave.
Let's start it. So let's go through the rules first. Rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. You actually hear the live discussion and the granular details here on the podcast. We save that for you. We just give us an overview of the subject, such as I told Brandon the title of one of my sections would be called "Is it the Fall of the Red Wall?" And the reason why I titled it this way is I see a lot of mistakes coming from the China party right now, the Communist Party that runs China. Because and I hate to make it, it's not political, it's not. That's just who controls China and who runs it. And with the latest elections they had and the latest things coming out from them, it doesn't look good for business. And when it doesn't look good for business, that means you don't want to invest in it. That's something you want to stay away from. You already look at the year over year. You had the trouble of Alibaba and Jack Ma earlier this year. Most Chinese tech companies are down 43%, if not more. Look at Didi. Didi's almost extinct. Baidu is down a ton. You have a lot of tech companies that are going down. You have a lot of companies that are trying to build plants in other countries, which is not good for China because that's how they make most of their money. So you might look at like shorten Foxconn or maybe not shorten it, but like I don't see unless that company starts building plants in other countries, it's not going to be good to build it in China.
Is
The Chinese,
Foxconn in Taiwan, or are they Hong Kong? I don't remember. I know
I,
they're like, I,
yeah,
I, I don't know, but I still would stay away from Taiwan just in case.
Yeah, right. Because they're right now they're intermingled in geopolitical events. Um, you have the Chinese yuan, which is not doing well whatsoever, right? So everybody's been really, really scared about overexposure to China. Right now, in the last two trading sessions, since President Xi has been tightening his grip on the country, because he got an historic third term as a leader, right? That never happens in China. He got a third term. He was seen on TV kicking out the last leader out of the Congress, the meeting, which is not a good sign. All these are not good signs for how the economic environment of this country is going to go going forward, right? Hong Kong tech stocks, they're the ones that have been down 45% in the last 4 months. That's where you got to be worried about. The yuan is depreciating extremely fast. In fact, it outflows. It's depreciating as fast as the capital is coming out of the government, which is not a good sign for the yuan whatsoever. That means uh I don't even know what that means, man. Brandon, can you explain that to me? When your currency is devaluing fast, just as fast as not faster than you could print it?
Yeah, it's hyperinflation. That is what that leads to. And it's done purposefully on the part of the Communist Party in China because they think it's good for their international corporations because makes their products look cheaper on the shelves of other countries. It's economic illiteracy because it just impoverishes their own people. It's not good for them, but it's a policy. It's done on purpose.
Let me explain. Let me explain why to any new investor right now how this helps the Chinese economy in some people's perspective. I mean, you and I both agree it doesn't, but how it could. And let me see. Correct me if I'm wrong in any statement I'm about to make. But if I lower the value, say the U.S. dollar, right, in comparison to the British pound, that means the British pound's going to be worth way more than the U.S. dollar next year, right? That's my goal, and I do that and I build a manufacturing plant in the US, that means those goods I create are going to be cheap to the British people. And thus I could export it very cheaply to Britain versus what it would cost me to make in the United States.
Yeah,
Is that a
but
good explanation?
yeah, but then it also like kills the purchasing power of your own citizens to be able to buy goods and services. So it's bad policy. It's bad policy, but it's done to benefit the rich, which is interesting for a communist party, you know, and for a socialist party, so to speak, that they implement those policies that benefit the rich and impoverish more of the poor.
Right. So let me go over some other facts that just recently happened. The onshore yuan is at its weakest since 2009. The offshore yuan is at the lowest since 2010. There is rumors going around saying that the Bank of China is no longer directing their own market, that the open markets are starting to move the yuan more than the country itself. All this has to do with, can they continue to make products cheap?
So yeah, and also you can't really believe any of the numbers that come out of China anymore. I should have been smart enough last year to avoid China stocks, but I was
Yeah, you were big into them.
yeah, and the thing is, and what makes them so attractive is that, you know, China could be a capitalist paradise. There's a lot of innovation that comes out of Alibaba and Tencent and Baidu and a lot of futuristic things that come out of those companies. Pure innovation would be great companies otherwise. And then you have American financial conglomerates going out and towing the line of China and then coming out to the United States and saying these are great values. And I fell for this, right? Like company, I shouldn't name any names because I don't want to accuse anybody, but these are companies now that I've discovered that are selling 401ks and financial services and making a lot of money by doing so in China. So now to me, it's no surprise that they come back to the United States and you know, say, oh, don't worry about what Xi is doing. It's actually great for the future of China. I think that they're purposefully you know, kind of brushing over the warning signs in China because they have to be able to do business over there.
Right, exactly.
It's unfortunate because a lot of Americans, retirement funds and pension funds and stuff like that are going to invest in China companies right now for the sole purpose of these big financial conglomerates to be able to still do business and sell these products over there as well.
So it's kind of like an intertangled marriage that we can't get out of, because they are still the number one country in the world to produce products at a very cheap price, and we're still the number one consumer of products at a very high level, and we are still dependent upon each other. They buy a lot of U.S. debt, and we need them to continue buying debt so we can fund our country.
Yeah. So I said this before, even when I was super bullish on China, I said that I was not going to die on that mountain. And I didn't. So, you could be super bullish on something, but you probably don't want to put all of your capital into it. Had I thrown a lot of my capital or a huge percentage into China last year, I wouldn't have beat the market, and I might not even be sitting here right now. Who knows? But I did beat the market last year despite losing big on China, because you want to keep your emotions out of it and be rational and say like, hey, I could be wrong on this, and if I'm wrong on it, I don't want to go bankrupt.
Right. And so my whole point is this with other companies such as Intel and Nvidia building plants in the United States, with companies such as Emirates building lithium plants in France, with all these countries starting to build these production plants outside of China, is this the beginning of the end for China's economy, or can they still turn it around?
What's interesting is that they've started making overtures to the United States and United States regulators. They were launching that big stock market over in Beijing, and things didn't go the way that they wanted them to go as far as value goes. And so now they're realizing that they still need the Hong Kong Stock Exchange, and they still need the ADRs and the Alibabas, and stuff like that to power their economy. So now instead of putting out a huge resistance to the SEC and to American regulators investigating the books of Alibaba and companies like that, they're actually sending translators to help them do it. So I mean that's
nice.
one positive aspect of this, is that the CCP actually seems to be cooperating with the regulations now, but it's really only because they have to.
Yeah, once you realize that, hey, our economy is on the brink here, we got to turn it around before it's too late.
Yeah.
And you start making the right decisions, man. I don't know. I see too many negative things. I saw the whole real estate infrastructure deal that happened was about 9 months ago. That everybody said was going to be the downfall of all economic markets, and it wasn't big enough to be the downfall of all economic markets, but it was big for China, and it was contained to just the Chinese economy, and they did default on some of their loans in China. I see too many issues, and I would definitely again give the advice: be hesitant on anything in China. Stay away for now. Just watch, because there's just too many negatives, too many headwinds. That's what a headwind is negative. If you're listening, you're brand new. Too many headwinds there going in. I would stay away.
There's been a couple companies that have been taking hits because of the situation in China that don't necessarily deserve it. I would say Wynn Resorts is one of them. Huge portion of their revenue does not come from China, despite what people think about them, and they've been hit hard because of it, probably undeservingly so. I think Apple can shift. They've had a China-centered policy for like the last 10 years, but I think Apple can still survive a Chinese.
Apple's not big in China, man. I hate to interrupt you, but Apple's not big in China. Huawei is the biggest cell phone in China, and then Samsung, I believe, is second, and Apple is third. Apple's third in China.
Yeah, but they manufacture there. Is
okay. I'll give. All right. Yeah. And Wynn Resorts, guys, if you're listening to our show, I like to always break down everything and explain it. Wynn Resorts has multiple locations in Macau, and Macau is pretty much like Vegas is the United States. Macau is the China. Same type of setup. They had different laws in Macau than they do in the rest of China, which is hilarious. But well, we had different laws in Vegas than the rest of the United States. So what happens in Macau stays in Macau. There you go, man. We both agree China is definitely something to stay out of for right now unless you have good reason and research to back it up. Let's move on.
Look for broken stocks though, and not broken companies. I actually heard Jim Cramer say this the other day, so I'm kind of just repeating it. But it's just like it's a age old saying in investing. You look for broken stocks, not for broken companies. And I would say that Wynn Resorts was one of those that got hit because of China, and it became a broken stock for a split second, and it probably shouldn't have been. So
I tell you what, Brandon, every time I write you off as like you're in a bear mode, you're in hibernation mode right now, bear, and then you come out and you make a call. Yeah. And I'm just like, where is this coming from?
Here's the thing. I am bearish ideologically, but oftentimes, it's not you really shouldn't let your ideologies completely get in the way of investing, right? So I'm up 6% on Disney right now, which is actually really frustrating to me because I was kind of hoping for it to stay flat or go lower so that I could buy even more. And I wind up oftentimes being in the situation like I'm in right now and being frustrated while I'm making money. So
hey, yeah, you're making money, you're profitable. You should be happy, brother.
Yeah. I think Meta is also, and this is not China related, but I think Meta, they report in a couple days. That's a broken stock and not a broken company as well. They've lost some focus, I think, but I don't think it's a broken company. It's a broken stock.
I believe the same thing about KULR Technologies, why I'm very long on it. A year ago this time, I said my timeline is years out in the future on it. I still hold it. The stock is the past 2 days is up 34%. Mm-hmm. And I've been lower dollar cost averaging the whole time and just slowly because guys, if you're listening right now, I will be upfront honest. I actually own just very little of that in my personal account. I have three trust funds I run, and all three of them are heavily invested in KULR because they're long term, and that's a long term play for me. So, yeah. Anyways, let's transition over to let's transition over to GE, man. GE,
okay,
go ahead, Brandon.
A little bit. We'll get into GE, and then we'll talk a little bit about Google and Microsoft as well, because their earnings just came across the board. Let me get my glasses on, transition into my Clark Kent disguise here.
I tell you what, let me, while you're looking this up, let me talk about GE from last year. Brandon and I had a show where we talked about GE for probably about 40, 50 minutes, maybe an hour, who knows, all about GE. Brandon brought it up, and he brought all these facts and figures, and there was a couple little takeaways. At that time, I said GE goes to CEOs kind of like the Cleveland Brown goes to QBs or coaches. It was just a turnstile CEO coming in and out. Brandon they got this new CEO in. Brandon liked him, and he went into detail explaining why he liked him. And at that time, Brandon, a year ago, if you guys want to listen to it, you can find it. I'm sure Brandon will be happy to send it your way. Brandon Beaver at chinchillapicking.com. Go ahead and email him. He checks it every day. But at that time, Brandon was talking about how they should split the company up in 3 different ways and why it was good, and he broke it down. Give it a listen.
Yeah, so here's the rundown on this here real quick. And by the way, the episode was GE past, present, and future. It was August of last year. You can hear me and Dave tell you that the tech market was going to be a tough one, and that it was going to go down in 2022 as well. We were predicting that back in August of last year. So yeah, pat ourselves on the back for that. Anyways, earnings per share came in at 35 cents per share for the quarter. That was 38.6% lower than last year. It was also 11 cents shy of what the consensus was, 46 cents per share for the year, or for the quarter, I mean. Group revenues rose 3.6% from last year to 19.1 billion, just ahead of analysts' estimation of 18.62 billion. Free cash flow, which I think is the king of the story for General Electric, because they were having a lot of troubles just a couple of years ago with free cash flow. They were negative as far as profitability goes. For the quarter, free cash flow topped 1 billion, and that beat forecast by a wide margin. Now, you mentioned that General Electric is about to spin off. So let's talk about their businesses. Give you a little quick rundown of how they performed for the quarter as well. Is Aviation has an estimated value of $50.04 billion altogether. This is 49% of General Electric's revenue. Healthcare is $34.1 billion estimated value, and this is 33.4%. Power and renewables runs about $16 billion with 15.9% in renewables, which is a negative for General Electric currently. This is only 0.4% of their revenue. So GE now has a net cash position of $18.89 billion. So the turnaround is still on track here. The company had losses of negative $23 billion in 2018. Go ahead, Dave.
What percentage is light bulbs?
I don't know. I've got them. We've got the GE light bulbs in our household.
So do I. I mean, it's is it well, but I'm joking, but go ahead. You said the turnaround's in full swing. I interrupted.
I think, you know what, it was a mediocre quarter, and you're going to have fits and starts here, especially if we face a recession in the coming year, or maybe we're already in a recession like me and you think, and it goes deeper. But anyways, GE Healthcare is this is a big focus for investors right now, because GE Healthcare is going to spin off into its own company. It will be the first one to spin off in the first week of January of next year. Orders were up 19% year over year at $5 billion. Revenue hit $4.6 billion for the quarter. This was up 10% year over year. Margin was down 90 basis points to 15.4%. I think that's no surprise with inflation being as high as it is. They're hosting an investor day for the spinoff of this new company on December 8th. So we need to keep an eye out on that. Listen to what they hear on December 8th, or what they say on December 8th. Power for General Electric, orders were up 20% year over year to $4.2 billion. Revenue decreased 5% to $3.5 billion. Margin down a full percent to 4%. So it's a really low margin on power.
That's thin margin, man.
Yeah.
Is that operating margin, total margin, net margin? What is that?
You know what? That was just they just said not total margin. It was total margin. It was non-GAAP total margin. Renewables orders, and this is like the really bad part of General Electric. Thank God it's only 0.4% of their value. But orders down 41% to $3.7 billion. Revenue was down 10% to $3.6 billion. Margin is a negative 26%. This contracted 2,190 basis points.
Negative margin?
Yeah. Negative margin here. They're expecting losses of $2 billion for the year. But then, however, let's go to another bright spot here, because GE Aerospace was a huge focus, because it was a big bright spot in their earnings report. Orders were up 6% to $7.3 billion. I think this is a big deal, because orders for anything aerospace this time last year, as we were coming out of the COVID pandemic, were increasing greatly. And travel was starting to pick up big. So orders going up 6%. That's good. Revenue was up 25% to $6.7 billion. Margin expanded 2.8%, 280 basis points. And they expect greater than 20% top line growth for the year on GE Aerospace. So when it comes down to this, what they're going to spin off GE Healthcare, and they're going to spin off GE Aerospace, and then Power and Renewables will be the third company. I want nothing to do with Power and Renewables. I will sell that immediately as it comes into my portfolio. I will keep Aerospace, and I will keep Healthcare as it is. Now, there could be some changes coming to Power and Renewables. They're in the midst of a restructuring process. We obviously haven't seen how that plays out yet. So if anything changes, I will keep you guys updated on it. Right now, super bearish on Power and Renewables. It is what is holding this stock down. But I am bullish on GE Healthcare and Aviation. So
Now, don't they do wind turbines? Is that what power and renewables is?
Yes, so it's part of it.
So they were dependent on government subsidies in order to keep that afloat.
Yes,
Sounds like that's what it
they
sounds
actually
like.
mentioned the fact that like the Inflation Reduction Act is having a big positive impact for power and renewables, despite their huge losses.
Wow. So they even got a boost of money from the government and they still
Yes.
are having
Yeah.
losses.
Well, and now what's interesting, GE Aerospace actually military orders were down this year. Third quarter they had a big boost. That put it a little bit higher, but I was interested to see that that military orders were down year over year, considering what is happening in the Ukraine and
Yeah, but Poland is not
Russia.
buying GE engines; they're buying Boeing helicopters.
Yeah, yeah, but GE does service Boeing.
That's true.
Um, Larry Culp said that the General Electric is positioned well to survive a potential recession. So that was like, to hear. But I mean, every CEO is probably going to say that. I will say this though, like you look at their cash on hand. They've got a net cash position of $18.89 billion. I've already mentioned that, but they're still a lot better off than they were just a couple of years ago. And they made it through the pandemic, which was a very large downturn for aerospace. So I mean, I'm still bullish here. I've actually bought more. It was not a knock your socks off report, but it also was not a report that showed me that they're going in the wrong direction either. So
Well, first of all, I think the pandemic was longer term a plus for aerospace because a lot of airlines got rid of older aircraft and put in orders for new during that time. They used that as an opportunity to do that. Number one. Number two, I agree with you that GE spinoff will create more money if you're in your investment after the spinoff when all the companies go separate ways and you get X amount of shares of each. And I agree with you of selling the power renewables, especially after hearing the negative margin. That is, you can't run a business. I mean, that stock should be going down to zero, but luckily you have the other parts of the company that are holding it up. So everything looks good. I mean, everything you said about the turnaround looks good. I based on what you said in August and based on this report here, I mean, you made some good calls. It's just that splitting up of the company is taking a little bit longer than what we thought back in August of last year.
Estimated value of GE Healthcare is about 33.4% of their business, revenue wise. So what you can expect the first week of January is that the GE stock itself, once healthcare does come onto the market, the GE stock itself will probably decrease around 33.4% because GE Healthcare will no longer be a part of its parent company. So your holdings of General Electric itself will probably drop around 33.4%, but you're going to have GE Healthcare in your portfolio and the value should make up for that, right? So
should yes.
And I expect, we'll see if healthcare can continue its outperformance as an industry going into next year. But if it does, then it should benefit, shareholders. Now, how many shares of GE Healthcare you're going to receive, that hasn't been announced yet. So once we get closer to that first week of January, we'll have more information about how many shares of GE Healthcare GE stockholders will get.
So do you buy now in hopes of all that, or are you waiting for more information? What would you recommend?
I mean, I've owned GE for a very long time. I think that, I think it's safe to buy now. I wouldn't buy now based off of the spinoff. I think that a lot of people probably will do that though. I'm just buying based off of the value that I think that Larry Culp is creating for this company. And the turnaround that he's had. And you can go back and listen to GE past, present, and future, where we discuss the entire history of this company in pretty good detail and talk about where they went wrong. The fact that he's turning this behemoth around, it was, my God, it was bad. It was really bad.
Yeah. Yep.
So, any positives of free cash flow and stuff like that, like that's just, that's a testament to Larry Culp's leadership. And that's why I'm buying the stock, because I really like the leadership of this company now. I don't know enough about, how many shares are going to receive of GE Healthcare. So I can't tell you to buy based on that, but I do think that they're probably going to create value by doing that, and I think I can't wait for GE Aviation. It's 49% of General Electric. And it's been a big bright spot and a huge focus of General Electric and Larry Culp. So that's the one that I really want, but healthcare would be second, and then power and renewables I'm getting rid of immediately.
Nice, nice, good. I just want to say, if you're listening right now, when you first start doing things like we're doing here, this podcast, or like we did with our Facebook group before this, and you start giving out advice, it's very hard to say yes or no to things at first, or say, yeah, buy this, because you're so afraid of giving bad information out.
Yeah.
And you're so afraid of letting people down. And it's very hard at first, but after a while, once you just take time and explain it out, like Brandon has here with GE, and he explains it out, explain his thought process, explain where he's going, you kind of get an understanding where his head's at, and now you have do your research, but yet you have a good idea of why he's saying it's a good time.
So we've had a lot of good advice on the show. We made some bad calls, but and we've made some really, really, really good ones. But and the good ones, I think, have outweighed the bad ones, which is good.
Oh, by
But
far, yeah.
listening to like our past shows where I was the bull in the China shop and stuff like that, I outlined the headwinds that were possible, and we outlined the things that could possibly go wrong. Just so happened that every single one of them went wrong. But at least we gave a heads up of what to look out for. And, we gave you all the information that you needed to do to make your own decisions and, invest your own way. So
Hey man, you're the Al Michaels to my John Madden. So
can
let's do this.
let's get into Google and Alphabet real quick, because their earnings just popped up. Haven't had a chance to listen to the conference calls because I think they're going to happen around 5:30.
Are we going to do Google or Alphabet?
Yeah. Huh?
I said, are we going to do Google or Alphabet?
Oh, I'm sorry. I meant Microsoft and Alphabet. Microsoft. And we were right about the tech industry being tough this year. It has been soft. Soft. That's a play on the ticker symbol, Dave, of Microsoft. It was funny. Okay. I can't see your face right now.
I tell you what, I just saw a headline because I'm pulling it out to get the latest numbers on the earnings report. And the very first headline that came out 1 minute ago on the Reuters was, this is the headline: U.S. Justice Department says Google enters into stipulated agreement to improve legal process compliance program.
What does that mean?
I don't know. There's no more to the article than that. And see, guys, if you're listening right now, this is what we have to go off of to make day trades. Is I have to go off a headline, and there's no meat to this article, but yet it's going to move the stock, and I need to make changes based off. It's incredibly hard to day trade.
Yeah.
You have to be doing this for years and years to be good at day trading, is what I have to tell people.
So Microsoft reported first, the revenue here on Microsoft beat expectations. Revenue of $50.12 billion. Analysts expected 49.6 billion. So nice beat there. Earnings per share came in at $2.35. Expected was $2.32. Revenue for the cloud segment, $25.7 billion. Up 24% year over year. Are we still working from home? Because my goodness, like I understand, like, businesses need the cloud regardless. Even if you're working from home or
everybody
not.
needs a cloud,
yeah,
man.
in order to interconnect your business, if you're a large retailer and you've got businesses in, Ohio and California, and you got to find a way to connect them. And the only way really to do it in this world now is the cloud. So even not being work from home, it's still needed no matter what. Productivity and business process segment, first quarter revenue, $16.5 billion, up 9% year over year. LinkedIn posted a 17% year over year growth. Does this mean that people are starting to panic and actually really look for jobs now? I know a lot of people dropped out of the labor market. For the longest time, we had a workforce shortage, and we still kind of do, but I wonder what that tells us about our macroeconomic situation.
I don't know. I created a LinkedIn account years and years ago. I haven't touched it since. Never did anything with it. Never uploaded any correct documentation. And yet, so they count me as one of their users. So I mean, like, who are they counting as users? Is it really active users, quote unquote, or what here?
I don't. You know what? Xbox related revenue down 3%. This is the only thing I can find negative in this report. Intelligent Cloud up 20% year over year. Why is this stock down?
I believe it's the guidance is what they're looking for headwinds going forward with Microsoft.
Soft, Dave. This is what the stock is looking to me right now.
So
Don't buy it.
there Microsoft came out and said that there was going to be some trouble going in economic underlying concerns, I believe was what they said going into next year. And the guidance go for next year was looking soft, and that's why you have the downturn. It's like, yes, we have a good quarter, but we need to save up cash because we're not looking to make as much next year.
Price to earnings is kind of high. It's not like super, it's at 25.6. So it's not like, it's high for this environment, but
well, I tell you what they didn't do is they didn't raise prices to keep up with inflation. So I'll give you an example, and I'm not going to go into details, guys. I'm not going to give you numbers. Please look up these numbers to make sure I'm telling the truth. But Coca-Cola had a great quarter this year, and the reason why is because they raised their prices. Coca-Cola raised prices all across the board on everything. So they kept up with inflation, they kept up with supply chain, and they blew the quarter out, and they raised their guidance for the rest of the year and said, we're going to do awesome, guys. That's basically what Coca-Cola said. And it's because they raised prices.
Yeah, that's the, I've recommended Coca-Cola as a stock to a lot of people, and I'm glad I did.
So Google, can I go into Google? Or are you still on Microsoft here?
Let me say this: the downturn today in Microsoft only 2.41%. It's still up 3% for the week, so maybe people are just selling the news here and taking some profits.
Selling the news is what you should do. If you're buying the news, you're already too late in my book. I've covered this before, and I've said this before, but there are some cases where you do buy the news, and it's because it's unexpected news. It's not earnings, quote unquote, news. It's not we knew this was coming news. It's something that just came out that moment, that day, and you're buying it that moment at that time. Yeah. That's when you would buy some news. Most of the time, you should be selling the news. On earnings, you should be selling the news.
Yeah. Well, I mean, it depends.
Well, then we agree to disagree, and that wouldn't be a first for this podcast. I'll tell you that.
So here's the thing. If you've got a run up right now, I'm looking at Meta, and Meta has ran pretty good going into their earnings report, which comes a little bit later in this week. Looking at that, I'm not buying now. I mean, I own the stock, right? I already own it, but I'm still like, if I'm making an earnings trade, I'm not going to buy Meta going into earnings because it looks like that's what everybody else is doing. And if everybody else is planning on selling on earnings, then what's the stock going to do on earnings? If everybody else is planning on selling, it's going to go down, right? But if you see a stock that's really, really down going into earnings for the past, like I would look at week. I would look at a week or a month. Look at a week or a month and then say, if it's down for the month and it's down for the week going into earnings, then expectations are super, super low. And anything that's positive that comes out of this earnings report might, send this stock higher. So then you could buy it and then sell the news. Right. But, if you get a situation like Meta where it's running and running and running going into earnings, might not be the case right now because Google just reported losses on advertising.
So hold up, before we get into Google, I do disagree. I agree and disagree with some of the statements you made there on the example of Meta. I can't sit here and tell listeners who may be new to investing that, hey, if a stock is down over the last week, the month going into earnings, that's a good buy. No, I can't do that.
It's a good omen.
I can't tell you. I can't. I mean, omens are what omens are. I mean, are we rolling out the bones out of a hat here, a skull, or are we actually analyzing stocks and research and fundamentals and macro events and making calls on investments? What are we doing here?
Anytime you're playing earnings, you're playing off the expectations. If the expectations are super, super bearishly low and too low for the stock to stay down, and then they miss on earnings, they miss on revenue, but then they give you good guidance or good free cash flow, then people are going to buy into the stock because they're going to be surprised by something. So, if you've already priced in a miss, anything that's positive is going to send the stock a little bit higher. And so, going down into earnings, is a good omen, so to speak. And higher going into earnings, it's not so much. I wouldn't buy anything higher going into earnings. But you might get a better deal. And this is a situation where you might be able to buy the news. A stock like Microsoft just had a great quarter, right? You could probably buy right now because people are selling and you're getting a better price.
All right, so let's move into final thought here,
Well,
man.
you feel like, hold on, we haven't even talked about Google yet. So let's talk about Google because they just missed on
Do
the
you
top
really
of the
want to
line.
get into Google here?
Yes.
You really want to get into
Yeah.
Google? All right, here, let me read this off. I'll get into this. I'll read off the numbers here, and we'll move into Google.
Alphabet.
All right, so Google came in. Alphabet reported third quarter revenue of 69.09 billion. That's up 6% year over year, but the estimate was for 70.9 billion, so they fell short of the estimates. The company's bottom line number reported earnings per share of $1.06, which missed the estimate of $1.27 from analysts. So they missed on top line and bottom line numbers. Alphabet reported revenue of 39.54 billion for its search division and 7.07 billion for its YouTube ads division and 7.87 billion for its Google network division within the Google ad segment. So YouTube and network were down year over year basis. Man, yeah, they were down. But Google ad was up 1 billion, but the loss, the miss came in because of YouTube and the Google networks being down. So YouTube is not pulling it in what it thought. Google Cloud revenue was up 6.87 billion from 4.99. So cloud, again, Microsoft Cloud doing well, Google Cloud doing well. Amazon, when they report their cloud's going to do well, you're seeing cloud computing doing well everywhere, which means, guys, like we called about 2 months ago, we say CloudStrike would be a great cybersecurity firm to buy. I still believe that's the case. So all I'm seeing from these numbers is like businesses like YouTube aren't doing well. And where YouTube's losing money, where Meta is losing money is TikTok, guys. And that's just a fact, is TikTok's taking it. And then people aren't spending the same, they're not willing to pay the same amount of price for a TikTok ad, a Google ad, a YouTube ad, or any one of these other ads like they were before, because now they're so saturated. There's so many quote unquote influencers. There's a lot of people like you and I, Brandon, podcasting. A lot of people don't want to pay the same price for ads that they used to pay for.
Yeah. So let me put some perspective into why the stock might be actually down as well as what you just said. Revenue growth you mentioned was 6% year over year. Last year, their year over year revenue growth was 41%. So I know they were coming out of the pandemic and advertising dollars skyrocketed greatly as a result, but that's a large decline. That's a big decline. From 41% revenue growth to 6% is a large decline. I think that's what's scaring people. And also the fact that they just missed earnings per share for the third quarter in a row.
Yep. 100% agree.
That's all I got. But you looked like you had something to say, like you thought what I was saying about like earnings might be wrong. So I want your thoughts on what I said, because this is the way I've played earnings when I've traded earnings in the past. I'm looking at expectations, and if expectations are really, really low going into a print of a good company, then I've bought the earnings or I've placed a call on the earnings. And if they're really, 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 really high, then there's been times where I've placed a put.
Yeah, I mean, yes and no. You're right in that, like that most of the time works, but most of the time works, but I don't want to, believe in something that most of the time works. I want to believe in something because I got actual research and fundamentals behind that. Also, that signal, that's also a signal. Is what we call a signal. I see that signal, and I see my research, and I see my numbers, and I see comparable companies posting out what they post out. Like I just said, Google has great cloud revenue, Microsoft's great cloud revenue, Amazon's going to have great cloud revenue. Like equals like, right? That's what we're going to see, and that's what those type of things will help you choose what to invest in.
Microsoft's cloud revenue was great, but I think it missed expectations, which were higher.
I believe Microsoft had too high of expectations for their cloud growth because they were growing at such a high rate that it's very hard to sustain. It's not unsustainable. It's very hard to sustain that. I don't want to keep everybody listening to us all day or all night, however you listen to us. I know you do. So final thought, Brandon, final thought, and let's wrap it up.
I do like Meta. I wouldn't chase it into earnings, unless it down, I think in after hours it was down like 2%.
You just said you would if it was down.
But it had like it was 6% rally today. So still up for 4% on the day the last time I checked. If it drops tomorrow because Google is not looking too good on advertising dollars, then you might be able to get into it. But don't chase it into earnings if it's still rallying. Wait until after ER to get a good price on it. But I still think it's undervalued.
Cool. I'm looking into definitely a Cooler. I'm looking forward to their earnings report because of all these major moves by lithium companies to build lithium building mining production plants outside of China, and how that kind of growth is going to affect where we get our lithium from and how that's going to affect everything. Does France, with their big, huge factory that they believe is going to pump out enough lithium for 100 million new batteries every single year, or 700 million new batteries every single year? It's an outrageous number that they said it was going to be able to pump out. With the use of lithium batteries still going higher, and with Cooler making its innovations, it is, especially with its, they finished phase 2 with the government contract, and they were going on to phase 3, and they were trying to find ways to continue to make batteries stop overheating and remain cool and last longer. That's the purpose of Cooler, and that's why I believe in this company and this stock. They're going to have big results as we move forward, especially with countries and states saying that we need to go all electric. Cooler is definitely going to be one who, once they have these innovations ready to go and sell, which they are beginning to, they're going to be making money hand over fist. So that is my long-term play, years out. So there you go. As always, guys, we thank you for listening. We hope we've been entertaining, educational, and uplifting, because we want everyone to make money. Have a good night.
Have a good night.